Welcome back to another video at Shoddy Trades, and in today's video I'll be going over my Goldbach strategy and how I use Goldbach and CLS as well as a few other things to help me frame my entries. The first thing I'll do before I even get on the charts is I'll go to forexfactory.com and I'll just look at what major news we have for the day. And I'm a London trader, so if there's a lot of New York news, then London generally is not going to provide good enough price action. But if there isn't too much major news for New York, then you might get some good price action. And if there is some for London, then you'll get great price action after that news event. So once you figure out what news events for the day, then I'll go back to my chart and I'll get on the charts roughly around 2 to 2:15 a.m. Eastern time, and from then on out, I play the waiting game. Like I said in the previous video, 1 a.m. starts our new 4-hour candle, and within that 4-hour window, I like to look for the higher low of that candle to be formed, and then I like for us to reverse, and I just ride the wave to the opposite side. Now, it's not clean all the time, and I'm going to explain why that is in a little bit. But to start off, I'm just gonna go over this quick example right here. I didn't take this trade, but I had it marked out saying go short if we retrace back up to here. Might look for shorts if I don't fall asleep. I didn't enter anything on here, but I'm gonna go over what CSD is first because it's a beautiful example to show. What CSD is change in state of delivery, okay? And pretty much it's a raid of buy side or sell side with the proper corresponding candle. So if we're going to take out buy side, you want to see a bullish candle take that out, aka a order block. And same thing for sell side. You want to see a bearish candle take out sell side, okay? And once that happens, you want to wait for price to close beneath the candle that took the higher low, and once price closes below it, like it did right here, that is when it's a confirmed CSD, okay? Now, with larger candles that raid highs or lows, you want to mark out the 50% of that candle because chances are price will retrace to that 50% level of that order block candle and then reverse if your bias is correct. So in this case, price that came up once had stung into it, and that's straight inducement because that's the first high as well in this fair value gap. So you won't even want to enter from there. Now, when we came back up a second time and respected, that's when you want to look for entries. And you also want to be looking for entry there because we're following our fractal timing with GB. What I mean by that is we have our accumulation, manipulation, and then our distribution. We always going to have a fake move before the real move. This bullish push up was our fake move, taking out liquidity before we dump for pretty much the remainder of the day. Now, once we close below the order block candle that rated our sell side or buy side, and you see our price coming back up into our CSD OB, that's when you want to look at Goldbach and see what rejections are forming within that Goldbach area. And I'm going to assume this area right here is a reclaim of a certain level, and we held it because we didn't take this wicks high right here. We held it. And once I saw that we were going to hold that, then you could have easily went short from here and literally just target Asia low as your target. Or we already took Asia low, but our manipulation low as your target. I like to enter this is one of my main models right here. A CSD entry from a Goldbach rejection within our allotted time window. And as well as this high being formed at 3:24 a.m., that's still in our time window for our 4-hour candle. Our 4-hour candle starts at 1 a.m., and ends at 5 a.m. to form a new 4-hour candle. Well, within that 1 a.m. to 5 a.m. time, I'm looking for a lower high to be created and hold, and then that's when I like to see a reversal into taking out our opposing liquidity, which in this case, it was a perfect example of what happened. Our CSD from taking out these highs right here, we close below it, we close below it, and then come back up, retest the level, retrace the OB level, and then retrace the CSD OB, and then dump. Now, if you don't want to enter just based off of the lower time frame alone, you can go to a higher time frame and just mark out what you see. Mark out PD arrays and mark out, like, this is also a CSD, because we also rated our highs on 15-minute. And if you have multiple higher time frame CSDs aligning, chances are it's going to hold. All right. Now, like I said, you have to anticipate news in advance as well, because we did have news today, which kind of made the charts look a little wacky. But I don't trade New York anyway, so it wouldn't matter to me. But in this case, yeah, we have our high created of London, and then dump afterwards. We distribute to the downside afterwards, and then we do end up having a reversal, which is expected, because if you don't know, you can mark out the fib time from 5 a.m., which is our start of distribution, and run it until 9:30, okay? And the reason you run it until 9:30 is because at 9:30, that's when our London close starts. That's when London close starts, and that spot is good for reversals or continuations as well. And as you see right here, it provided a reversal perfectly right after that 9:30 got hit. It provided a reversal. So that's why you want to mark out your fib time from 5 a.m. to 9:30, and then again from 9:30 until the end of distribution, which is 2 p.m. All right. Now in this case right here, for our first New York cycle, we have accumulation, manipulation, and then our distribution 1 was a consolidation. It didn't have much going on, but then as our D2 stage is coming up, we run this high right here, and this is an inverse fair value gap we're already in. I'm pretty sure this was our 15-minute. No, 1 hour maybe. I forget which one it was marked. Yeah, so we had our 1 hour inverse fair value gap marked. So I was also could have been looking for an entry from there, which is right here. And this is also D2. And D2 is, like I said, known for continuations or reversals as well. In this case, we continued from previous cycles. All right. Now, there's going to be times where you're not going to want to enter London at all. And those times are when you see Asia range and or CBDR completely expanded and not in a tight consolidating range. If it's completely expanded and just the price action looked too good, chances are London is not going to provide good enough price action for you to have a high probability trade. Now, obviously, you can take a trade any time you want, but the higher probability is not going to occur at that time when you see Asia range expanded. In this case, Asia range was in a consolidated space, so London provided good price action. Now, I'm gonna go back to CSD, because there's other forms of CSD you can use, and what I mean is we have our fair value gap CSDs, where I'm gonna find a good example here that shows a rejection from it. But pretty much when you see a bullish fair value gap, you want to see price sting into it, and then if we close above it, that's CSD. So right here, here's an example. We have our fair value gap right here. All right, bullish fair value gap. We have a down close candle that stung into that fair value gap. Now it's a filled fair value gap. Now we've balanced it. Once we close above that down close candle that's stung into the fair value gap, once we close above it right here, this is now a confirmed CSD. And you can enter from a rejection from here because this is also an order block. This is an order block. And same thing for a bearish fair value gap. Like if we had, let's see here, right here, example right here. We had an up close candle inside of this fair value gap right here, right? And an up close candle inside of this fair value gap. Once we close below that, right here, you can just wait for the retest back up to that order block CSD and enter short. And you see, price holds the open of that order block. We hold that open. That price isn't going to go above that if we're still bearish. That CSD is not going to allow that, which is why CSD is super, super strong when you apply it with Goldbach and CLS. Like there's two examples right here I just randomly found that show you how CSD could work without Goldbach levels. So we have our order block form of CSD, and we have our fair value gap form of CSD. All right. Now there's one more form of CSD that you could use. It's not used as much, but it's inverse. It's the same thing, but just it's inversed. So let me find an example if I can see one. I don't really see a example right now, but pretty much it's the same thing as a regular fair value gap CSD. It's just inversed. So like right here, it's not obvious or you can't even see it, but say like once we broke through this candle to the upside, and once we broke through and closed through this fair value gap, you don't want to use it to the downside anymore. You can use the open to the upside, and you see once we came through and closed above, we wicked to that open again and we respected it, and they continued higher a bit. Now it's not high probability because this is news, but I'm just showing you examples of how CSD can work and how inverse CSDs work. All right. Now, how I apply it with my strategy is literally just that. I look for an inverse fair value gap or a PD array with CSD and a GB rejection, a strong GB rejection. And what I mean by strong GB rejection is in cases like this, where we close on the line itself, like we're closing on the line. And this is a reclaim. This is a strong reclaim. This is an easy short from here, and as well as a CSD. And if you could spot CSDs all the time. Like there's so many to choose from. Like we have this high right here, this high right here, that's in a fair value gap, and so on. We don't hold this fair value gap, so it doesn't matter. But in cases like this right here, where you see a fair value gap and price closes through that fair value gap to the upside, you could potentially look for rejections from the upside now instead of the downside once we close above the candle that broke through that fair value gap. So in this case, this candle right here had closed above and through that fair value gap. Now, at times, you could look for entries regarding that, but you have to have bias correct, like I said before. And today, our bias was bearish. So, once again, I'm going to show you another example of CSD OB. You see how the fair value, or we'll use this inverse. So we have this inverse fair value, this inverse fair value gap. It got broken through to the downside, right? And this is a large candle that's breaking through. Once we close through that right here, you can use it as an inverse CSD. And since this is such a large candle, you want to mark out the 50% of that candle. And as you see, we came up to that 50% perfectly and then dumped from there. And this is without Goldbach. This is just CSD alone. And in this case, we're at the high of Goldbach, so it was just even more of an obvious trade. But that's how you want to use CSD alone, and combine it with our timings for Goldbach. Now, 15-minute, 10-minute, 20-minute, 17-minute are the time frames I use to look for inverse fair value gaps. And I personally like using inverses better than regular ones because they're stronger in my opinion, and I just like them more, especially on those time frames because the price respects it more often, and you could see if we're actually going to continue higher or lower from that fair value gap. Now, I'm gonna find an example where price is not easy to spot or to follow. Like in this case, you see Asia range right here is not really in a consolidation. Like it is, but it isn't. Like we're steadily declining. Now, when you see that, you can anticipate London being a little bit choppy or not providing great price action. Now, in this case right here, we'll do the same thing every day. We'll mark out our 11 p.m., 5 a.m., and then do the same thing. Accumulation, manipulation, distribution 1, distribution 2. Now, in this case, price runs one of the lows in manipulation. It's not the lowest low manipulation, but it's one of them. I personally wouldn't have entered from here, but you could have. Why? Well, fake move before the real move. Look at the timing we're in. We're already heading up, and we still haven't had a strong higher low created, like from 1 a.m. There's no strong anything created. So that's why I didn't take anything, because I always like to anticipate a reversal. I don't like to trade like the first fake move. I want to see our higher low of that 4-hour candle created, and then start to see that dump or whatever the case may be. In this case, we did not get that from 1 a.m. to 5 a.m. So when that happens, that's expected because of Asia's session. It was a trash Asia session, and as well as we have liquidity resting pretty close above. Now, we do the same thing, but from 5 a.m. to 9:30 a.m. Now what do you see? Accumulation, manipulation high, distribution sell-off. That's what you want to see. If you don't see anything obvious in manipulation session from 11 p.m. to 5 a.m., wait until New York session and you'll see something occur there. Like in this case, it was our market makers sell model, and I'm pretty sure I called this out in the Discord. But if you point out our CLS cycles starting at 2, and then going so on, so go 2, 3:30, 3:30 to 5, 5 to 6:30, and then 6:30 to 8. Okay, and then 8 to 9:30. Now, just from the cycle alone, you can clearly see what's occurring. Add Goldbach to it, then it's even more high probability. Now, what do you see? Monday, Tuesday, there's no lower high of the confirmed high of the week for Tuesday. Wednesday, still pushing up. Thursday, once we take that Wednesday high and you start to see the sell-off and a market shift, that's when you can look for entries. And like I said, you want to see that rejection from Goldbach as well. And it just makes everything much more higher probability. All right. Now, a lot of times, I'll enter a bit too early and get stopped out, and then the trade will come back around and do what I intended it for it to do, even though I thought it was the right time. There's still times where it's not going to 100% work, but I'll say 85% of the time it's going to work. And now another little tip is mark out 11:59 closing price and mark out 2 a.m.'s open price. If 2 a.m. opens above 11:59's close, chances are you'll see a bearish London or bearish New York, all right, and vice versa. So just have that marked out in the back of your mind as well. And in this case, for the weekly profile, it was just a consolidation Thursday reversal. We just consolidated, accumulated orders up, and then started the Thursday reversal, and heading into Friday, we reversed to complete that market maker sell model. All right. Now, you can use any PD array you want in terms of like where you want to, like how you want to enter. But me personally, like I said, I'm using inverse fair value gaps and CSD for my entries. And I personally like to use 5-minute or 15-minute CSDs and then go to a lower time frame and find entries from there. All right. And for lower time frames, for higher quality entries, look for BPRs to enter from. For lower time frame, 1 minute, 2 minute, look for BPRs to enter from, because BPRs are really strong on the smaller time frames, as well as inverses at times. But I really just wanted to go over some specifics regarding my model and how I use it. Like we have a couple more things related to Goldbach. The most common points of reversal for Goldbach is the breaker areas and EQ areas, okay? Breaker areas and EQ areas. Now, in this case, where do we reverse from? After 9:30. Breaker area. How surprising is that? And just follow the algo as well. We went from breaker up to RB, rejection block, right here. And then now we should see it come down to our FVG level, because we're following the algo. And when you have CSD marked out with Goldbach, like in this case right here, it's going to work pretty much every single time. Every single time. This was a stop run out of the ERD, and we still closed back inside of the range on the 81, and then we dumped. I personally like to stay with the 27 range, but sometimes I'll go to 81. If 27 isn't showing much, then I'll go to 81. But your EQ, high, low, and breaker levels are key areas for reversals. That's where you want to be looking for reversals at. And you can use standard deviations as well to help that. So like you see this standard deviation from Asia, right, from Asia. We came down to that two standard deviation and then reversed. You can use that as well. We're in that known breaker reversal area. We're in the 2 to 3 SD range, right? And we hold CE of that range as well. So that could have been a long entry for that London close reversal. Because me personally, I like to trade whatever I see, but it has to be in the proper time. It can't just be no random time that you enter from. Like in this case right here, 9 9:30 to 11. That's the first stage for our second set of CLS cycles. Because remember, from 2 to 9:30 is the first weekly cycle, and then from 9:30 to 2 p.m. is another week. So you can use that as well. But after 10 to 11 o'clock, it becomes less probability. So just keep that in mind as well. But I really just wanted to go over my main model and go over what CSD was and how I find my bias. So yeah, just keep that in mind. Asia range, you want to see it consolidated for a good London session, and also just keep in mind news events for the day, and that's also going to help you determine where price is going to go and when price is going to go. So I hope you guys enjoyed that video. I hope it was very informative, and there will be a lot more in the future. I hope you guys enjoy. Like and subscribe for more.